Well, hey, I'm the Cardinal.
And I'm the Hill in Cardinal Hill Wealth Management.
My name's Jesse Harris, CFP.
And I'm Robert Hill, CFP, PhD. I'm going to stop saying that.
You should keep saying it. It's way better.
I need my glasses for nerd mode. Okay, so today we're going to give you a checklist of things that we think through when a new client or an existing client comes to us with stock option grants. So there's two types. We're going to talk about public and private companies. So first, for a checklist for publicly traded companies, stock option grants, here's kind of the questions that we're asking. We'll do answers kind of in another video. So first off, did the client get a big stock option grant at hire? And is the client going to get annual stock options and or RSU grants? RSU is different than ISOs. We'll go over that in a minute. Second, what documents grant give the details of the grant? Is it in writing? Does the grant agreement require acceptance? And are there any surprise provisions such as a non-compete clause? Third, what is the exercise price for the options? What's the vesting schedule? And what's the term until expiration for each grant? Fourth, what type of stock options are given? So there's non-qualified stock options, we call them NQSOs. There's incentive stock options, or ISOs. And there's also, as we mentioned, restricted stock options. Those are becoming more and more popular. RSUs. And there's even weird stuff called phantom stock. It's not even stock options, but people talk about it in that same conversation. Whatever type it is, we want to review the tax treatment at exercise and at sale of the options. Okay, fifth, speaking of exercise, what are the exercise choices? What are the options that we have available to exercise those? Sixth, what is used for tax withholding at exercise? And what is the client's marginal tax rate? Sometimes the default withholding rate isn't actually appropriate for the client. Sometimes the worst is when it's too low, then there's a big surprise come tax time. And just remember, if you have ISOs or individual stock options, there's no withholding at exercise. So you might want to set aside some cash on the side. Seventh, what happens if the client leaves the country, dies, becomes disabled, retires, or retires early? So all of those can have different tax treatment. And what happens if the client becomes retirement eligible? What happens with a leave of absence or furlough? We just want to know the impact on the vesting period and the post-termination exercise period. So getting in the weeds here, but these are things to think about. 8 is what would happen to the options in an acquisition or merger, any sort of change of control. And that's both to options that you hold, or if you're halfway through a vesting schedule, what would happen if the company changes ownership, which happens a lot. Yes. Ninth is with early exercise stock options, does the company help with a Section 83B election? Which is typically referred to as like the cashless exercise, or provide any financing for the taxes owed or the exercise costs. And if not, is there any outside financing suggested? 10th, this is really nuanced, but really important if this applies to you. What are the company's rules for preventing insider trading? They may include a blackout period, they may have window periods, or they may require pre-clearance. So it's really nerdy, but we work with clients on these. 10b5-1 plans can be very detailed. It's best to consult an attorney for some of the ramifications of that. Does the company require a certain ownership percentage, company stock, or have retention rules around those? So if you're an insider, a lot of things to think about. 11th, does the stock plan provide a broker, or is the company using someone to help administer the plan? How do you get access? Is there another online portal? Do you have to talk to somebody? What account will the shares appear in after exercise? And are they portable once they're vested and held? Can you move them out? Are they locked? What are those rules? And then last, thinking big picture as wealth managers, this is really important to us. What is the client's percentage of their net worth in company stock and including only the held shares and also any to be vested shares, assuming you work there another 5-10 years, what does that look like for their net worth? And also at what rate are income and capital gains taxed this year and the next. I can get into investment strategies and when you exercise and things like that. Get real detailed with bargain elements and everything, but we won't go through that today. So
Cool, thank you. I'm going to go into our checklist for private company stock compensation. They're just different, right? So they're a little bit more opaque. A lot of times the private side is, but these are the questions that we ask, and they're good ones. Is your award a grant stock option, whether it's an NSO or an ISO, which Robert covered a little bit ahead of me, restricted stock or RSUs, or stock appreciation rights, so SARs is what we call those, or synthetic equity such as a phantom stock, or does it consist of an interest in a limited liability company or shares deposited into an ESOP? Again, we won't go into the weeds of all that, but if that's your situation, we'd ask you those questions and talk through those details with you. Mm-hmm. How did the company devise its valuation method for the setting exercise? This is typically the one that nobody knows, and it's really hard, and private companies a lot of times don't disclose it. So that's the tricky one. Mm-hmm. 3, do you have early exercise options? These provide the ability to exercise options immediately upon grant and receive restricted shares with a reverse vesting schedule. Those provide the benefit, kind of like a signing bonus a lot of times. What are the vesting rules? For example, if there is an initial 1-year cliff vesting period from the date of hire or grant followed by a monthly vesting. In addition, do the grants fully vest with a second trigger only after IPO, initial public offering is what that stands for, going public, acquisition, or some other type of liquidity event like receiving an additional funding round. How will you pay the taxes or exercise costs given that you cannot sell shares to fund them? For example, does a company offer loans, or should you evaluate third-party financing for exercise costs? With any tax withholdings, what methods are allowed or required by the company? Again, that's a huge one that Robert hit some on the public side, but how are you going to pay taxes is a big question for a lot of private company stocks because they're not public. So you just got to figure out where your liquidity is coming from. Mm-hmm. Will the company create liquidity for its stock other than the initial public offering or IPO or being acquired? Are any of the shares qualified small business stock, QBSS, eligible for the special QSBS tax treatment? Really, really cool rule. Really cool, but
can be huge.
Won't go into the details on it, but it's a really fun one. Are there buyback provisions and repurchase rights that allow your employer to repurchase shares if you leave the company? Alternatively, how should, after you terminate employment, must you exercise options to avoid forfeiture? And would the exercise trigger a non-compete provision? We have seen all of those, right? We have seen, hey, you've got this time frame, all of that kind of fun stuff, or non-competes. If you take the stocks with you, it's a lot of nuance to it. How soon after IPO can you sell the shares? What does the lockup allow? And again, these are a lot of times blacked out if you're one of the guys that's considered a private shareholder or an insider. And how does it differ from going public through a direct listing or a SPAC? Again, just differences, nuances. Mm-hmm. And then 10, lastly, what special investor rights, such as those related to dilution, liquidation preferences, and acquisition proceeds, affect your potential gains? A super boring video, I understand, but these are huge questions that can greatly determine your long-standing wealth. Mm-hmm. And that's why we go over this. If you have any type of company stock, whether they are public or private, you need to go through these checklists to make sure you've got a full understanding of what's going on with your wealth situation.
Mm-hmm. I think it's good. And I think what we see is clients get excited. I got stock options. And then when they start looking into the details, they go, this is a nightmare. This is homework. Yeah. Congratulations. I just got a lot of homework, but we're here to help. Hopefully this video was helpful. If it was, please like and subscribe, and we'll see you on the next one. Cheers.